Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Wednesday, January 28, 2009. Today's FOMC statement held little in the way of surprises as the Fed held rates at near zero and said the economy had deteriorated since its last meeting. It also said, quote, it continues to purchase large quantities of agency debt and mortgage-backed securities to provide support to the mortgage and housing markets, and it stands ready to expand the quantity of such purchases. The committee also is prepared to purchase longer-term Treasury securities if evolving circumstances indicate that such transactions will be particularly effective in improving conditions in private credit markets. The euro-dollar, failing to break resistance at 1.3330 overnight, fell 120 pips in the aftermath of the release, finding support at 1.31. This is a 38.2% retracement from the euro rally seen the last three sessions, and was slightly below the low set yesterday. U.S. stocks were up today, with the Dow Jones probing the level near 8,400, though it gave up some of those lofty gains. The reason for the rise in equities was reports that the Obama administration may adopt a plan to buy bad assets in the financial system and create a so-called bad bank to hold them. The dollar-yen pair broke above recent resistance at the 90 level, completing about a 150 pip rise from the start of New York trading in the aftermath of the FOMC announcement. 45 minutes after the FOMC release, it was New Zealand's turn to decide on interest rates. Here we had a surprise 150 basis point reduction, though the Reserve Bank of New Zealand has been pretty aggressive in trying to cut rates recently, and some analysts thought the expectations of a 100 basis point cut was too little. The rate, now at 3.5%, is a record low. The Kiwi-US dollar pair started falling in the wake of the FOMC announcement after reaching an intraday high of 0.5370. From there, we saw a slide of 180 pips as the greenback gains were accelerated by the larger-than-expected rate cut by the New Zealand Central Bank. The pair found support at 0.5185 and saw a pretty strong counter-rally. A sense of risk appetite pushed the US dollar-Canadian dollar pair down to 1.2023 overnight, which is a near 76.4% retracement of the greenback rally we saw between January 11th and January 20th. Oil prices reached a high at $43.50 a barrel after bouncing off support, which is a positive for the loonie. After the FOMC announcement, the greenback paired some of its losses, but as long as risk appetite holds, the Canadian dollar may be set to see further gains for the rest of the week. Taking a look at some other fundamental news, consumer prices in Australia fell 0.3% in the fourth quarter, a figure that was slightly higher than expectations. In Germany, meanwhile, preliminary data on consumer prices for January showed a bigger than expected drop. For the month, prices were down 0.5%, and on the year, prices are up 0.9%, the smallest amount since February of 2004. Tonight, look for retail sales data from Japan. Overnight, we'll see the UK will post a measure of housing prices, Germany posts its unemployment change, and the Eurozone releases measures of consumer, business, and economic sentiment. Tomorrow, the US releases data on jobless claims, durable goods orders, and new home sales. Canada, meanwhile, releases its producer price index. And that concludes our broadcast for today. Thank you for joining us here at CMSFX.com, and happy trading.